The insurance rates, premiums, if I can use that term, in southern Minnesota tend to be considerably higher than the rest of the state of Minnesota. And when we compare that nationally, they tend to be quite a bit higher than many other parts of the country. Some would argue that as the closer you get to southeastern Minnesota, they begin to approximate some of the most expensive insurances in the country for a fully insured plan. So if you're an employer and you want to do the right thing, if you will, by your employees and provide health insurance, it can be a pretty expensive proposition.
We're delighted again to welcome as our guest for this episode of Take Charge with HELPcare, John Kelly. Last time he talked with us about some of the implications of the One Big Beautiful Bill Act for consumers, and particularly as they're looking at their individual perspective on health insurance and health care. This time we wanted to have him talk more about what these changes mean for employers and how, as they're looking to recruit and retain a good solid workforce, how some of these new provisions might actually assist in that. So, John, welcome back again. Glad to have you with us. And maybe you could start out with giving us an overview of some of these changes and what they mean for employers.
Yeah. So, Lee and Dan, thanks for having me back. It's always good to see both of you. And hopefully we'll have a good, full discussion today like we did last time. And the employer market, as you know, Lee and Dan, is quite a bit different than the individual consumer market when it comes to health insurance and health insurance options. In the Minnesota marketplace, it's almost like we have a few different markets, the metro Minneapolis-St. Paul market functionally being quite different than the southern Minnesota market. And with HELPcare Clinic being located in southern Minnesota, we really want to focus in on what does that marketplace look like, particularly for employers. And I know, Lee, you and I have talked about this before. The insurance rates, premiums, if I can use that term, in southern Minnesota tend to be considerably higher than the rest of the state of Minnesota. And when we compare that nationally, they tend to be quite a bit higher than many other parts of the country. Some would argue that as the closer you get to southeastern Minnesota, they begin to approximate some of the most expensive insurances in the country for a fully insured plan. So if you're an employer and you want to do the right thing, if you will, by your employees and provide health insurance, it can be a pretty expensive proposition. So it becomes something that employers really think long and hard about before they make that decision. And when they do, they really need a trusted advisor to help them say, how do we design benefits so that my employees are taken care of and we can afford to do this again next year? So what we know out of OBBBA is that there are at least a couple of changes that will be important for employers to be aware of that are directly embedded in the law, and then a few things that employers may want to think about because of the context in which the law is happening. So we'll start a little bit with what the law has embedded in it, which is the ability to define direct primary care no longer as health insurance. And that may sound like, well, what the heck does that mean anyway? It means that if you are an employer that has an insured, either self-funded insured product or a fully insured by an insurance company product, you can offer direct primary care services as a benefit without infringing upon your core insurance product that you're offering to your employees and their dependents. So that's pretty cool. If you structure a benefit design with a qualified high deductible plan option for your employees, you, the employer, and or your employees can make a contribution to a health savings account that can also be used to cover their out-of-pocket medical expenses, and for the first time ever, starting in January of 2026, can also cover their subscription costs to a direct primary care clinic like HELPcare Clinic. So those are some things right out of the gate that are embedded into the One Big Beautiful Bill Act. The other groups in southern Minnesota that I've been, I would be interested to hear, Lee, from you or Dan about that we don't get a lot of conversation on are those employers that have what I would call low-wage employees. So those employees that might be most likely are hourly, and they may be seasonal, or they may be working in service industries or meatpacking industries where the their annual income is still low enough that they qualify for Medicaid. And this was just an option I found out about yesterday, but there are new rules coming in for renewing your Medicaid, right? And those employers really want their employees to have access to healthcare services. And there is some concern that because of the additional administrative paperwork, those employees will just not renew. Maybe they failed to fill out the form properly, or they didn't get it in a timely fashion. And if you non-renew on Medicaid, you're not eligible for a marketplace policy with a subsidy. So it all of a sudden you can be bare. And that's a scary proposition for employers in southern Minnesota. Think the ag industry, think meat packing. Perhaps there's some meat packing industries around here where that is relevant. Don't know. So there are companies that will actually help the employer help the employee with that renewal process. So what they're trying to do is to say, look, we realize that it's in your best interest, the employer, to have these folks have healthcare coverage. We get it. And maybe you have a direct contract with the HELPcare Clinic for primary care, but they might need specialty care, right? So someone in their family has a more serious condition. So you want that medical assistance still available to them. Just let them know that there are options. There are companies out there that will actually help you help your employees with that renewal process so we don't lose them and they don't end up going bare. And I think that's a big deal because the practical reality are the wages are what they are. We're not making a value statement about low wage jobs, right? They just are what they are. And if you qualify for medical assistance, you ought to take advantage of that entitlement. And if you are concerned about losing it, maybe English isn't your native language and that all these forms get a little bit more complicated and hard to fill out, there are people that will actually help you help your employees keep their medical assistance. And I think that's a great kind of a feel-good thing out there. Truthfully, employers probably don't have the time to do that and don't know the laws well enough to know how to do all this. And if there's someone out willing to help, I think that's great.
Yeah, I think that sounds great too. And I guess I wanted to talk a little bit about with the employer plans and some of them that may be 10 or 15 or 20 or 30 employees. And they want to get they're thinking about going level funded or self-funded, using a stop loss policy. And then perhaps wrapping direct primary care in as one of those claim reduction strategies. So they would have the opportunity. I guess this opens up a lot of choices for them to say, well, I could either have direct primary care be one of the core parts of developing a plan like that, or if I develop a plan that includes an HSA, my employees could decide whether they want to choose direct primary care and kind of get that on an individual basis. So those are options that would be available to them, right?
Absolutely. And one of the products that you're referencing, I would call it an ERISA plan or a self-funded plan. And I'm old enough to know that when I started in healthcare, the thought of a smaller employer, like I think you mentioned 40 employees, 25 and 20 employees, going self-funded was unheard of years ago. It was nobody did that. It is not that uncommon now. In fact, probably on the self-funded space in terms of just numbers of employers, it's really leaning toward the smaller employer or looking at going self-funded. And self-funded is just another way of saying you, the employer, are bearing the risk for those claim costs. And the way you soften that risk is you do what's called stop loss, right? And level load products that gives you more predictability in your monthly spend for that plan. Because it's a self-funded or an ERISA plan, which is the technical term for it, you are not subject to the Affordable Care Act rules. So you have much more latitude in how you design your plan. Generally, if you're smaller, you're not subject to the Affordable Care Act rules anyway, but under self-funded, and perhaps you're a growing business, you can maintain that greater degree of flexibility. If you have a healthy employee population, you will find that generally is way more affordable than going with a fully insured product. And you can still kind of control your monthly spend through those other wraparounds, that stop loss and that level load premium that you pay. In those cases, you can carve out or carve in primary care. So you could say your primary care preferred option is the HELPcare Clinic. And because you are fixing that expense as a subscription rate rather than an unknown, I don't know how often my employees are going to go in, fee-for-service rate, you get greater predictability in your spend. And for a small employer whose cash flows may vary seasonally or based upon sales or based upon the economy, predictability is a wonderful thing to have. It just lets you sleep a little easier and feel better about offering employee benefits. In southern Minnesota...
Yeah, predictability is good and lower is good too.
And lower is good too.
Yeah,
and I think, Lee, you could speak to this better than I can, but I've worked with a number of direct primary care providers around the country. The general rule of thumb I've always felt is that when you have that established relationship with your primary care provider and they're not on the clock, you go into the exam room, their hand isn't on the doorknob waiting to go out, the quality of your experience changes dramatically. Over a period of time, maybe not year one, but over 2 or 3 years, your actual use of healthcare services goes down. Because the motivation of you, the patient, and your primary care doctor is truly to keep you healthy. And that type of benefit, it's hard to put numbers on, but I believe it's real.
right.
You establish that kind of relationship, you will find it satisfying as a patient and probably more cost affordable over the long term.
Yeah, absolutely. We're seeing people that, 50% of Americans have metabolic syndrome, which is, 3 of the 5 things, high waist circumference of 35 inches for women, 40 inches for men or more, high blood pressure, high blood sugar, high triglycerides, and low HDL cholesterol, the so-called good cholesterol. 50% of Americans have that, okay? And we're not immune to that in southern Minnesota. We might even over-index on it a little bit. I don't know. But at any rate, when you can come in and get an hour-long appointment with your practitioner and actually be addressing those underlying causes of disease and helping and recognizing that through lifestyle, through dietary kind of interventions, you can actually start to reverse some of those diseases. We are definitely seeing as you get into the year 2 and year 3 of membership, because we've been around 3.5 years now, you're definitely seeing some of those people that we used to see maybe every couple months or quarterly. Actually, we might be seeing some of the people that have a lot more going on. We might see them monthly, just because they're working on making some changes. But that does tend to wind down a little bit as they've started to make those changes and those are starting to take hold. And through some of our programs like the HELPcare Challenge and through the lifestyle coaching that we offer through Jane Connell, who's our registered dietitian, it really does lead to less utilization over time. And that's really it enables everybody's incentives are aligned in the same way.
Well, and you and I have a couple of clients in common between HELPcare Clinic and the insurance side, and that's exactly what I hear from the clients. They really appreciate the qualitative difference in the relationship and the effect it has on their health. And not just physical health, it's just mental health. They just feel better that they're doing good things for themselves and for their bodies and for their family.
Yeah. And also not having to worry about what is the bill going to be when I go in.
Exactly.
Like it's part of people don't go to the emergency department typically because they think I'm going to die right now. They go because they don't have that relationship set up and they don't know where they would get help. And so I guess I might as well just go in. And then they end up getting the most expensive kind of care that there is.
And it is one of the anomalies of living in the United States that healthcare is one of the few service products where you have absolutely no idea what it's going to cost you when you come out the other end before you go in the front end. And you may not even know what it costs you when you're all done, to be honest with you, because it's a black box of sorts.
Yeah, you get those notices that says this is not a bill, your explanation of benefits. And
yet your palms break out and they're sweaty and you wonder what the heck happened.
Yeah.
There's one other product that
may not really have a clear idea yet of what direct patient care is, primary care, right? So do you mind just taking a moment and letting them know how that works?
Yeah, so Lee, I'll jump in, but Lee, you're really the
Yeah.
expert. So direct primary care legally is just defined as a service where your primary care provider is providing services directly to you, the patient, for a set fee. Typically, it ranges, I think I've seen it between $80 and $150 a month in, most places in the United States. Oftentimes, but not always, direct primary care providers elect not to participate with governmental programs like medical assistance and Medicare, primarily because they want to keep their administrative burden lower and therefore make themselves more accessible and affordable to their members.
Yeah, that really is well said. Direct primary care, in the HELPcare Clinic instance, is something where we just focus on building a relationship, and we don't want to be just a transactional kind of filling claims with the insurance companies. The administrative costs would be a nightmare. The process and what that does to the quality of life for the practitioners too, and when they're having to do individual claims for all these, different services and getting pre-authorizations for things. When we do specialist referrals, we still engage with the insurance system, because if it is a specialist referral, you are going to have a pre-authorization typically. And that's where having health plans that include primary care membership, direct primary care membership as the foundation, really takes out for 90% of the care that most people need. It's going to be what they can get, through a clinic like HELPcare Clinic. And then it's just important to have something that's the safety net on the backside, that for people who have something that comes up, whether it's a high cost medication or specialty care or hospitalization that they need, having something associated with it that enables you to get that paid for is really essential to have.
One of the other things that, Lee, you and I have worked on that employers in your market may not be aware of is what we call a group waiver plan.
That'd be good to talk about.
I've worked with some of your brokers who work with your employers. Every so often, employers have either employees or dependent spouses who become eligible for Medicare. So they're moved either through disability or aging into Medicare, and they're on their employment-based insurance. And so for large employers, you can't technically force someone off to take Medicare. And so they'll end up paying commercial premium rates for a Medicare beneficiary. And it can be a delicate conversation. I'll just let it go at that.
Well, we talked about how as we get older, we tend to use more health care. Right? So that those are some of the more expensive members of the plan.
Yeah, so it's a legitimate concern. We do have in Minnesota an option, which I know we have HELPcare Clinic as one of the providers in that option, and that's called a Medicare Advantage MSA, Medical Savings Account, group waiver plan. And so for employers that find that they want to offer a retirement benefit, or they may have dependent spouses who are Medicare eligible that are on their plan, or they have employees who are Medicare eligible on their plan, there is now a Medicare Advantage product that's available. And I've worked with the company owners of the product to embed direct primary care in the product as a product benefit. So if you are on this Medicare Advantage product and you want to see the HELPcare Clinic, the plan will reimburse your monthly subscription fee to the HELPcare Clinic, which is a great deal if you happen to already be a member of the HELPcare Clinic and you're wondering, what do I do when I'm on a fixed income and I retire? This is just a way to help soften the blow of that. If you're an employer and you want to offer an option that has curb appeal to your Medicare beneficiaries, whether they're retired or currently working or their spouses are on your plan, it's just another option for employers to think about. And it's really neat that we can offer this with HELPcare Clinic being a featured direct primary care provider of this plan.
Yeah, I mean, that is and this is something that is not available to individuals. It's not like the Medicare Advantage plans that you see advertised all once you get into that open enrollment period. This is only through employment relationships, right?
So if your employer says yes, it's a really simple process. They fill out an 8.5 by 11 sheet of paper that says we're willing to make this available. If you're a member of a union and your union says we'll make this available to our union members or their dependent spouses, Or if you're a business association like a chamber, you can make it available to any chamber businesses that are members of your business association. So it's not hugely difficult to get in, but you're absolutely right. You have to kind of check the box that says, I've said yes. And then the beneficiary, the Medicare eligible, can have access to the plan.
Well, this is fantastic. This has been a great discussion, and appreciate both last time talking about the individual aspects of this, and then this time the employers. It is something that's changing, just because we're sort of still going to be sorting out probably over the next couple months what this all means and how the regulations get written for implementing these things. So we will look forward to having you back again, John, maybe in a couple months, as we're getting ready to head into the open enrollment season, to talk about how these changes that have just taken place in the last couple weeks now will be making a difference for people in 2026 and beyond. So really appreciate your time and appreciate you being with us too, Dan, and we'll look forward to having people join us next time for Take Charge with HELPcare.
Great to be with you guys.
Thank you, Lee. Thank you,
Thanks.
Dan.
Thanks for joining us. If you enjoyed this episode, be sure to leave a comment or a review, and to subscribe on Spotify, Apple Podcasts, or on YouTube. And also to share Take Charge with HELPcare with your friends and on your social media channels. At HELPcare, our passion is helping people take charge of their health and their health care, helping employers take charge of their health plan expenses, and helping physicians and other practitioners take charge of their healthcare careers. Learn more about the HELPcare Clinic difference at healthcare.health.